Hello, welcome back to Stock Shark. Our mission is very simple. We wanted to create financial equality to everyone. That's why we are offering this free YouTube based financial guidance. So let's dive into the details for today's episode. We will be looking at the top fintech company to own for long term, right? Let's look into the details. Let's dive in. So this company is Bill.com or Bill. It's about $26 billion market cap company. They provide a cloud-based solution for financial back-end work of various small and medium-sized businesses or medium-sized companies. They take care of all the financial operation of these small companies, from making the payment to receiving the payment, and to make sure it all reconciled properly. And they have some sort of artificial intelligence model in it to make sure it's fully automated. Let's dive into more details about this company. So the Bill.com is about 15-year-old firm. I think they established back in 2006, and they went to IPO only back in 2020. So it's kind of company, where they established a profitable revenue model and they went public later. So I like that type of companies. Also, their revenue is both subscription based as well as transaction based. And they have fully automated cloud solution for various small and medium companies. They can simply enroll themselves, and they can get their financial payment stuff ready in minutes, once they get onboarded in Bill.com. So the gist of their solution is actually to make and receive payments. And a lot of small companies and medium companies, it's actually a headache. They have to have various accountants, or financial people to do this type of work. Instead, they can sign up in Bill.com, and most of them are, their operations get automated. And why we are recommending it for long term, I'm going to explain very detail in next few screens, but for now I will tell you, after this pandemic, or once this pandemic ends, obviously this will end, this pandemic. The labor cost will definitely substantially increase. The labor cost will increase, and especially it will hit hard onto those small and medium businesses, because most of their cost predominantly on the labor side in US. So for them, saving any money on labor cost, it's like impact their business bottom line very positively. So that's why the cloud-based solution always, it's a one-stop, place for these guys to go and enroll themselves. So the labor cost, it's not going to come down anytime soon, and it's not just US phenomena. It is across the world, Europe, Asia, everywhere labor cost is going up, and especially white collar labor cost is going through roof. So that is one main advantage for Bill.com to attract these companies to get enrolled on the financial automated financial solution. Also, right now they are present only in US, and so they have so much global opportunity to tap in, especially Europe and Asia. I can think of, because the business model they can tweak into those jurisdiction, suitable for those jurisdiction, and keep going, right? So that's why we are very much like their business model. Let's dive into other one noteworthy point about Bill.com, right? Bill.com actually provides uh, various interfaces to integrate with some of the financial providers, etc. So let me start from here, right? We know that a lot of accounting software providers already exist, like QuickBook. It's very famous accounting software, Oracle, NetSuite, and so many others, right? So what Bill.com is doing is they are not competing with these people. Actually, they are partnering with them so that in a way that their cloud solution could seamlessly get integrated with this type of software. So whoever suppose using QuickBook can easily integrate with Bill.com for financial reconciliation, which doesn't exist in these softwares. So they don't need to re-enter data or anything. All they have to do is automated API will be connected to their QuickBooks or Oracle, whatever software they are using, and it extracts those data and it will start doing its work, automated reconciliation in Bill.com. And same thing, a lot of banks, they have a, Bill.com has partnership with various banks and various accounting firms. The accounting firm is a partnership with them is really key because they recommend a lot of small businesses to get into this Bill.com. So to make their accounting firm life easier, because it comes with compliance and regulatory stuff as well. So that is their business model. So they have their own unique financial solution. Along with it, they have interface or integration with other partners to have this financial solution really kind of enticing to small businesses. Let's dive into their revenue. And their revenue is going through roof, especially last 1 year after this pandemic. If you look at, they made about $158 million financial year 2020. Now they are expected to make $238 million. So it's almost 80% jump, right? So that is the key. Actually, sorry, 51% jump for the revenue, right? And so that's really amazing the way they are doing this business. And especially if you look at the quarter to quarter comparison, if you look at Q4 20 and Q4 21, that projected one, it's a huge difference, almost 86% quarterly revenue they are expecting. So this type of growth, actually attracting a lot of people to get invested, and that is the reason. It also pulls a lot of other small customers to get in because of this, the growth as well as their reliability. Now, let's look into other details. Their profit. I'm looking at financial year 2020 where they made around $120 million profit. This is GOP, gross profit I'm talking about. And you look at projected financial year 2021, it's about 176. Again, profit also going up, gross profit tremendously. It's about actually how much? It's about 52% up, projected to up on their gross profit. So they are really growing good. So that shows that their business model is getting adopted by various small and medium businesses. So that is a key, right? So let's move into key risk in this business, right? So one thing is, I don't see any business moat. And that means any big financial firms like SAP Financial or Oracle Financial or someone can create their model, and so that is a one huge risk in it. And also, if you look at in general, after Fed printing or this type of asset purchase program created so much liquidity that actually kind of created a momentum across all growth companies in US, right? Bill.com is not exceptional from that perspective. It's created that type of liquidity and attracted a lot of market participants in the growth names. So any sudden tapering or Fed increasing rate definitely impact this type of growth names. So one should worry about that as well. Even though I like that space, I like their business model, etc. But if macro picture is really bad, then it would impact their business. Now, fintech space is really booming. It's a lot of companies are new companies are coming up. So does the competition as well with one another. So for Bill.com to survive and keep having the same momentum, they have to innovate a lot and have to add new features. So to make it more of like a one-stop shop for people to sign up, or small businesses to sign up for all their financial needs, not just make and receive payments. Maybe they have to add crypto or something like that. I'm guessing they would do later. Because these are all the key to survive, and innovation is key. If they don't do innovation, they will be gone. So, and also they have to expand it to global market, because their market cap is right now about 26-27 billion dollar. For any metric, this is very expensive. You compare price to sales or price to earnings, any metric you use, it's very expensive. Of course, I mean, the market is paying that, market is determining that price because of the rate of growth they have. 50 to 55% revenue jump every year. That is what it is getting projected until 2025, 2026. So that's why market is paying that type of premium. But they have to expand it to global market to get into that 40 billion, 45 billion dollar opportunity. Because this payment make and receive payment business is close to around 60 to 65 billion dollar. So that they are simply scratching the surface right now. And they recently issued additional securities. Then also they issued convertible notes to mop up around 1.5 billion dollar. I hope they wouldn't do anything same thing like that anytime soon. If they do that, that would dilute existing shares. So that is also one of the risk items. So being said that, let's look at the technical picture, because in Stock Shark we not only talk about fundamentals, we also look at technical picture, because we strongly believe in one has to look at techno fundamentals. That is a key for before putting the money in. So I'm looking at here, it's look like a megaphone pattern. Because see, it doesn't have much of history, because it came to the market only in around September, October 2020. So it doesn't have much of history. It's about only 2 years of history on the technical side. They came in IPO only in September 2020, even though the company has been there since 2006. So with the limited technicals, I'm trying to see where it could head into. So it has a megaphone pattern, which I really like it. Then it has a mini support at two places. So what are they? One is at 265 here. It has one support, and another one has here 190. It has a very strong support here. Um, and I like this because of this weekly candles. I like this ADX as well as MACD. Both are pointing to very bullish. Um, Now, I'm thinking for long term this is going much higher, but I would wait for a pullback, because it's a bit expensive, because they issued this additional secondary offering at 272 share. So I would expect it could come down to 265, that support. So I think it would consolidate between 260 and 265. If it does, I would accumulate that, or if it falls below that, I would definitely go and accumulate to have the initial target to 325. And that is where it's a measured calculation. I would expect initial resistance at 325 on the upside. Then it could go on to up to 400 to 420 for long term. So that's all, folks, for now. If you like my video, please subscribe to it and leverage it. Thanks for watching.